Hi, Larry Gaines, PowerCycleTrading.com. And last night in my free video, I went in and discussed the overhead resistance that we've come into, this massive amount of overhead resistance based on moving averages, the 200-day, the 150, and the 100 moving day, period moving average, which we'll look at in a minute. But I wanted to go kind of drill down a little bit deeper into the S&P to show you what my momentum indicators are saying. So first off, let's just see where we are on the daily time frame. So I'll pull this up, and you can see that we are, massive moving average resistance. Just think of this like as a big ceiling above. So we've got the 100-day moving average, the 150 and the 200. Okay, so a lot of overhead resistance there. Now the next thing that we have is when we look at the monthly time frame, this is what I call the macro time frame. We still have cycle 1 and 2 negative. Okay, so this is momentum. On the weekly, we've got cycle 1 positive but 2 negative, and we've got cycle 1 and 2 positive on the daily. So neutral long term based on momentum, still negative or weak on the macro time frame. So let me show you what that means as we go back in time. So we can go look at what happened back in 2008, 2000, and these momentum indicators have been really great at signaling when the market has turned the corner on what I call the macro basis. So let's take a look. So here we currently are. So we've had the big sell-off down here to close to 215. Now we've had a retracement from this low to where we currently are, which is at the 618 retracement of about 33%. And so that's a lot of times that's typical of a bear market retracement. Now, if we go, this is the monthly time frame, which I call macro. Cycle 1 and 2 are negative. Now we go back here to 2008. All right, so we see the market turned over, got crushed to the downside. Obviously, remember that. And then we did not bottom. We had cycle 1 go positive in June of 2009, but we did not get total confirmation until October 2009, and that would have been a total confirmation of this downtrend being over on a macro basis. So earliest time frame would have been June of 2009 when we had cycle 1 go positive, and then a little bit later cycle 2. Now you go back to 2000, and it even took longer. So you can see everything rolled over here. We had reversal signals up here, moving average crosses, massive sell-off. Okay, cycle 1, 2 negative, and it stayed negative down here until almost 2.5 years. And finally, cycle 1 went positive in March of 2003, and then final confirmation in June of 2003. So 3 months later, but that would have been the first, sign of a market bottom right here on cycle 1 on the monthly. And just to back up or go forward to where we are currently, we're not even close to that. So based on this, what I'll be looking at tomorrow, I wanted to wait to see what happened with Apple and Amazon. I think this is the area where the markets could, if we're going to have that pullback, it's going to start probably in this area here where we are, and the first target would be back down to this 50% retracement at around 278, 280. So I'm going to look at maybe setting up butterflies or bear call credit spreads, something like that. Now, if you'd like to learn more about selling or selling option strategies for kind of extreme market volatility, I'm going to be doing a really in-depth market trading course on option selling strategies this Saturday. So make sure to use the link here and sign up, and hopefully I'll see you there. Good luck trading.